be central, make your life so better.
Guys, is Johnny Trading, and like I said, this year is all about technicals. We're going to be checking the trade we took on the 10th of January on Wednesday. So let's go right straight into it.
So yeah, we're looking at the trade we took on Wednesday, 10th of January. Okay, so this was on Gbpjpy. So this is how we took the trade. First of all, we look at the overall trend of the market. So we're looking at the weekly charts. On the weekly charts, we can see that the overall trend is bullish. So let me take out my drawings so we could start charting from scratch. Okay, now so here we can see that the overall trend of the market is bullish on the weekly. So we move to the daily, and what we can see is we can see a range within this zone from the bullish trend. Market is ranging within this zone. So within this range, we can see an area, a zone where price has reacted on 3 occasions. So we can tell that this is a valid support zone or a valid demand zone. So we mark it out on our chart. And then we move to the 4-hour chart. So now we can see on the 4-hour chart, price is moving bullish. And since we've seen on the weekly and on the 4-hour that price has been moving bullish, what we should be looking for in this kind of trade, in this kind of market, is buys only. We shouldn't be looking for anything other than buys, because we are seeing more of bullish trend than any other trend in the market, right? So whenever you see an uptrend, on multiple time frames, it is very important that you stick to that trend. So you are looking to buy in an uptrending market. You see the trend on the weekly, you see the trend on the 4-hour, on the 1 hour. So let's look at the opportunity on this trade and how we took the trade. So okay, so the demand zone, we can see, just like we saw on the higher time frame, we can see that this area is an area where price has reacted from on several occasions. So we have demand here, we have demand here, and we have demand around this area. So price delivery, in my inner circle I talk about price delivery, where is the delivery of price from a point A to a designated point B. So what that means is, when we talk about the market makers, when we talk about the institutions that move the market, they have a target where they want the market to go to, right? So with that knowledge, we know that, okay, the market is moving from one point to another. So if the market is an uptrend, the target is to move price to a particular higher point, usually a point that has been retested in the past, right? So what we are looking at now is an uptrending market. So we are only looking for buys, because we know that the institutions will be looking to move the market up. But they won't just do that. Like, you won't just see a series of green candles consistently moving the market up. No, there will be manipulations in the market. There will be different there will be so much price action, because there are other actors in the market aside from the institutions, right? So yeah, so let's look for our entry and how we found our entry on this trade. So this is the previous high, and this is lower high, right? So price moved from this demand zone, broke the first high and broke the second high, which means the market within this small range, there was a change in market structure. There was a break of market structure within this area, where the markets were where the markets consolidated for a short period of time. So price breaks the first high and the second high, right? And in the process, it creates a low, a high, a higher low, and a higher high. So what we're looking for here is, we're looking to find the higher low at this point. And this higher low is, we are targeting this previous resistance zone. We're targeting this previous supply zone because if price taps into the supply zone, it means it's joining the group of traders. It's joining the group of traders within this zone to send price to the downside. If you're in my inner circle, you know about the groups. So in each trading area, there are different groups. When you see support and resistance zones, those are the different groups that are pushing price to a particular direction. So even if price is in an uptrend, there are different groups within that zone that are either pushing price higher or pushing price lower. So this zone right here, even in the overall uptrend, this zone is pushing price to the downside. The sellers at this point are pushing price to the downside with the intention of pushing price lower. Like I said before, price delivery is the delivery of price from a point A to a point B. So the sellers at this point have the intention of pushing price lower to a particular lower point, usually a point that has been touched by the market previously. But just like I said, now you can see the market has been tested at this point, and price retests to this zone and then reacts back to the upside. So based on the pressure, based on the selling pressure, as a result of traders who make use of strategies like just basic retail higher low lower high without taking notes of, okay, where are the supply and demand zone, where is the manipulation, where are the institutions pushing price. They just have the knowledge about, okay, let me make use of, okay, let me just make use of Fibonacci, let me just make use of the lower high strategy. So many of those traders will make use of those strategies to create their entries, their trade entries at this point. And so that's why you see most of the time when there is something like a manipulation, you see that there is a high here, there is a lower high, and then before price can create another lower high, you see that the price pushes and clears out that entire trend. So that short-term trend is usually a manipulation if you do not have the overall view of the what the overall trend stands for. That, okay, this is an uptrend. You may be fooled and take sales at a level where the market will break and push higher. So with the knowledge that, okay, this is a demand zone and any trend in this within this territory is going to be temporary, you already know that, okay, fine, let's wait until the market taps into that demand zone to see the reaction and what happens next. So when price taps into that demand zone, now it has cleared this first high and cleared the second high, which means the pressure from this demand zone is more solid than any pressure that would have come from sellers at this point and sellers at this point. So a demand pressure that can push beyond supply pressure from two different zones is a valid demand pressure. And it's the same thing also for supply. A supply pressure that is greater than one or two demand pressures is a valid supply pressure. So now, having cleared this supply pressure, we're looking to see the we're looking to see the price action that will be formed at this area, because the price action that will form above this resistance zone is very important to whether we're going to take our trade or whether we're going to wait to see how the market turns out. Because at this point, if price taps into this area, if price taps below this resistance zone at 183,900, around 183,900, and price continues to move to the downside, then we know that the supply pressure is valid and pushing price lower, which means the supply pressure that was sustained from this zone, the supply pressure that was caught from this zone, from this 184,200 area, and the supply that was caught from this 183,900, they are both pushing price to the downside, which means there's a lot of volume pushing price to the downside. If that happens, we can only just wait to see, okay, if there's a reaction, maybe there's demand pressure that doesn't break the high, and then we'll be looking for a lower high that will be valid, that will create a fair value gap for us to enter and find entries for the sell side. But since we are even dealing with an overall uptrend, those kind of trades are only short-term trades. Those kind of trades, you're not looking to take them to catch a large amount of pips. And for a beginner or somebody who is not very conversant with the market, who is not very familiar with the market, I would advise that you just stick with the overall trend of the market. And in this case, we are sticking with the overall trend of the market. I personally, I look more for trend, like trending trades. I want to see that the trade is in the trend of the market. So it's easier for me to hold my trade. It's easier for me to wait for TP because I know, okay, this is the overall trend of the market. So this is how the market should be moving, right? And so that was why I held on to this trade. So let's move to the let's move to the 30 minutes time frame. So on the 30 minutes time frame, we can look more closely at the candlesticks, right? We can look more closely at the candlesticks. So we can see price is dumping to the downside. Let's move to 50 minutes. So what I saw that validated this trade. So price taps in. We can see on the 15 minute that there is a strong demand zone in this area. There's an engulfing candle that is pushing price to the upside, but a lot of selling pressure is reacting and let me say rejecting that demand pressure with the intention of pushing beyond that demand pressure to the downside. Like I said before, to join the previous resistance zone to continue pushing price to the downside. But we can see that there's more momentum, more demand pushing price to the upside. So now we can see that, okay, since this is a strong demand zone and there's a lot of buying pressure in this area, price is likely not to break this demand zone, but create a higher low to push price further. So let's play price. Now we can see this candle here. This candle is a spinning top candle. So this spinning top candle usually represents when the color of the candle is being printed, that's when we can determine, okay, this is what this candle represents, and it has engulfing features, which means it's a bigger candle. It's not a smaller candle because there are smaller spinning tops that just come with like long wicks and smaller bodies. But this spinning top has a bigger body, and then the one that follows it is a pin bar, and this pin bar is usually a reversal candle. So based on the fact that we know that this is an uptrend, a market is pushing from the supply area around here to try and push price down below this demand zone, but yet we've seen that there's a spinning top candle coming out as green with engulfing features, and then we see that there's a pin bar here. Those are two validations that, okay, this is when the market is now responding to the overall trend and creating a zone for entry. So I place my entry here and put my stop just below the last week. And my take profits at the previous high. At the previous high. So play price. Yeah. So I took that trade, and somewhere on the screen you see the outcome of the trade. So I took the trade, and it was just normal break and retest. This is pretty much my strategy that I use to take all my trades. If you check on my IG, everywhere, this is the same pattern I always use for my trade. So it's usually a break of the structure, and then it retest to the zone, to either the resistance or the support zone, and then with the candlesticks validation, I'll be able to know whether to enter or not to enter the trade. And usually I use the overall trend of the market. I respect the overall trend of the market in taking my trade. So it's very, very simple and basic, just normal. It's still the same retail support and resistance, but I look for more specific details, like, is it tapping into a demand zone, is it tapping into a supply zone, what are the candlestick confirmations for this trade. So I look at each and every candlestick, I look at the patterns, and I use multi time frame analysis. So I just make use of more specific details. Apart from that, it's still basic retail strategy with just a touch of the supply and demand trading, a little bit of SMC. I pretty much have knowledge about every trading style there is ICT, but I try to make it as simple as possible, especially for my students, for them to only pay attention to the things that matter the most and will help them to find profitability especially in looking for passive funding challenges. If you are trying to pass a funded challenge, for example, this is already a 2.74% on a trade. If you take this four, if you have four of these trades, you've already passed any challenge that has a 10% win, you know, a 10% mark for you to pass the challenge. And if you want to take a challenge that at 8% is the winning, you only need eight, you only need four of these for you to pass that challenge. So usually I just make sure that you take at least 2.5% on a trade, 2% to 2.5%, 3% on rare cases, 4%, but on average I have about 2.5% as the average for entry on a trade. So this is a trade that we took on the January 10th. I'll be putting up more specific details in the inner circle where we share all our trading ideas, and I break down the whole price delivery and everything about the promise of price delivery, the structure, informed entries and uninformed entries,
I hope that
and all
video
that.
was
So
valuable to you guys. So if you want to get more content like that, follow me on every platform, Johnny Trading on Instagram, Twitter, Johnny Trading, and subscribe to my YouTube channel, Johnny Trading. So see you in the next video, guys.